All right, so let's get started. Now, before we get started, I like to talk about something. Again, I always like to talk about this. What should you be expecting? What should you be expecting in this whole thing? What is really possible with this, right? And I'm just going to tell a bit backstory, a little backstory. Um, I've been trading for a very long time, since 2013. Please mute your mic, please. If you're not talking or asking any question, please mute your mic. So I've been trading since 2013, and then I uh, around 2020, I have this crazy loss. I lost a lot of money. I even got into debt and all that. So I had to learn the hard way how to make money with small account size, like use small to make big. I had to learn. I tried so many times, lost a lot of money, but then I was able to get it right with this Derek broker and all that. With Derek, I was able to get that. All right. So what is really possible? Now, I'm not going to say that you can. It's just after you learn in a few days you'll be able to do that. No, I'm not going to say that. All right. It takes learning. You have to learn. You have to know how to do this properly. You have to learn how to trade this with proper money management and all that before you then will be able to try to turn small account size into large account size, all right, which is totally possible. Exactly, this is what I'm doing, and that's what I'm going to show you right now. But before we get started, again, like I said on the TikTok, I just need to explain properly. On the TikTok, there I said, let me go to my report. I started with $20. Actually, I started with $20, but because I wanted to be the account I started with, right? A lot of history and everything there on the account, a lot of history and everything on the account. Um, Hold on. I want to we send the link to the group for those that are just joining. Hold on. So so I wanted to have a proper record, right? And that's why I've deposited in this account. And then decided that account was not really it was not verified. So I had to deposit in here. All right. So and as you can see, this was when I deposited in the account, right? And I really still want to emphasize on this because a lot of people were like, show real account and everything on TikTok and all that. This I started officially on the 14th of June. Let me just quickly go to my statement here, and then let's go to um, deposits. All right, as you can see, on the 14th of June, it completed $100, total of 102 balance, $102, right? As you can see here. So let's go to trade table on the 14th. Right there, the first trade I took was this, and I was able to make $5 profit. The second trade I lost $26, and I was left with $82, right, to be precise. And then with that, $82, I was able to build and make consistent profit. This is consistent profit, as you can see. And this is a trade I took today. The last trade here was a trade I took this night, and then $293. All right. And then let's go to how much. This is my balance, 179. So let's go to how much that I've actually withdrawn so far. 179, 1,700 and $1,794 balance. Now let's go to withdraw. Now let's even assume I deposited $100, right? Let's leave the $20 out of it. All right. So let me bring out my calculator here. Let's see how much this is actually. Let's see how much this is. Okay. What is this? Someone is saying something in there. Where's my calculator? All right. So let me find. Where's my calculator? My calculator should be somewhere around. Okay, this is it. All right. All right. So that 14th, right? On that 14th of June, $20, right? I like to take out my capital. I don't just like to trade. I like to withdraw, right? 20 plus 20, then we have 32 plus 32, and then we have another $32, then plus 32. Okay, I don't know if I did that right. Let me just start this again. 20 plus 20 plus 32 plus 32. All right. All right. So I'd already made my profit, my what I deposited back here on the 17th. All right. And then look at this. 295 plus 295 plus 139 plus 139 plus 345 plus 345. Guys, $883, guys. $883. Yes, the recorded version will be available after the class. 800 and $883, right? And I still have a balance of 1,000. So this plus 1,794 is $2,677, right? $2,677. Let's ignore the fact that I started with $20. From a deposit of $100, I was able to make $2,677. So approximately $2,600 profit in few days, guys. Look at today is 19th. So 14, 15, 16, 6 days. It's not even a week. Right? It's not even a week. So is this possible for you? Definitely. Is this possible for you? Definitely. Will you be able to do this after 1 week or 2 weeks? No. But then you'll be able to do this properly. See, the way I trade this, right? The way I do this trading, this one I'm showing you right here is risky, right? It comes with a lot of risk. All right. But then I'm going to be showing you a way to do it properly, like to use proper money management. All right. So you can, let's say you deposit $100, you'll be able to make 10-20% profit every single day. Imagine that. Let's say you're making $10-20 on $100, on $1,000, you're making $100 every single day, which is very, very possible with proper money management. Money management. So that's what we're about to learn. That's what you should be expecting at the end of the whole thing. You'll be able to make proper, consistent profits, and then you'll be able to do this magic, right? Because I call it magic. You'll also be able to do this magic. So we are getting started. Now, again, we're not just going to be jumping to, here. We're not going to jump in here, come into the direct platform and showing you stuff how to do. I actually did the magic here. I'm not going to be doing that. But we need to understand how to trade itself first. And it's very simple. It is not difficult. You don't have to understand everything about trading. You just need to understand very few concepts properly. Very few concepts properly. That's what you need to understand. That's what I'm going to be showing you. Understanding market structure properly, understanding fair value gap properly, understanding liquidity properly, understanding order block properly. Those are just the things that you need. Those are just the things you need. That's what I'm going to be showing you. Now, again, for my VIP and my VVIP group, my VIP group is just, after showing you all this, how to apply it to here properly, the money management and everything, how to do it properly. That's what the VIP group is going to be for, right? And then the VVIP group is going to be for those that want to actually trade with me, right? You want to trade with me, right? I'm going to be going live like this for those in the VVIP group. I'm going to be going live like this, right? I'm going to be coming live like this, and everybody's going to join me. That's going to be those in the VVIP group anyway. All right, they're going to join me, and then we're going to do analysis together. And with that, you're also learning. You're seeing exactly as I am taking my trade. We're going to be doing everything together, placing trades together, and all that. And then in the VVIP group, again, I don't want so many people. I cannot handle so many people. I want everyone in there to actually make good profit, right? So I just need 10 people in there, and I already have 5 people there. So 5 more people to join me in there, and then I am not going to be accepting anyone else in the VVIP group. But then but then the VIP group, right? But then the VIP group, um, you can actually join, learn, and then go apply it yourself. All right, that's just what the VIP. And then trust me, I like to cheat in a way that you're going to understand. So you're going to understand properly. So the VIP group to join is $30. The VVIP group is $60. Of course, the $60 you're seeing there is just still discount. Trust me, I'm supposed to charge $100 for it. But then I'm going to be charging $60 for it because I actually want us to get to the 10 people because, of course, I'm about to start something crazy here with this account and I want you guys to benefit from it, right? I don't want to just start and leave people behind. I want a lot of people to benefit from it. So that is why I am not. I just want it to be at $60 so more people can join. I can get to 10 people as soon as possible, and then we can actually start. So now, let's say you're joining the VVIP group, and then you want to start. You can either trade with me with $10, start with $10 or $20. Now, if you're starting with $10, you will have to deposit $50. So you will have at least 5 chances because you're just getting started taking my signals. Shit can happen. You could make mistake. You could lose the whole fund. So, but then we're doing $10. While you deposit $50, you're starting with $10. So you have 5 chances. There's no way we're going to try it 5 times. You're not going to get it, right? And then if you're trying with $20, you're going to deposit 100. Now it depends on how much you want to do. If you want to your what you're trading with to be $20 or $30, then just times 5 is what you're going to be needing to deposit. And I will have to see it in your account before I can approve you trading with me because I would not. No one is going to lose any money on my watch. All right, so that's just me personally. Again, I need just 10 people in there. I get my 10 people, and then no one will be privileged to join anymore. And then I'm going to stop going live on TikTok once we get to 200 or 300 people in the WhatsApp group. I'm going to stop going live on TikTok, and then I'm going to stop going live on TikTok, and then we can then focus on the training. All right. All right. So people are already sending me a DM concerning the VVIP group. So if you want to join the VVIP group, don't send me a DM right now. Again, just 5 people remaining to join the VVIP group. So if you're interested, uh, just send me a DM. I'm already getting DMs of people that are already reserving their spot there. All right. So let's continue here now. Let's continue. All right. So let's get started. Again, today we're talking about market structure. Market structure. Again, because I'm going to be posting this on YouTube, I'm going to be explaining this again properly. Right, so what is market structure, guys? That is the question. Again, I'm going to be using the charts this time so you understand. Right? Market structure is simply the movement of the market. The movement of the market. The way the market moves. Now, this is the first market here. This is volatility 25 index. It's 2 things. It's either this market is going up, as I can see at this level here. Hold on, let me use this. At this level here, it was going up, as you can see. At this level here, it was going down. At this level here, it was going up. So it's one way. It's either it's going up, it's going down, or it's going sideways. I'll show you instance where this market is going sideways. Let me show you an instance where it was going sideways. Guys, can you still hear me, please? I think my network is really fucking up tonight. If you can hear me, just say something, please. You can unmute someone.
Yeah, I can hear you. I can hear you.
Okay.
Yeah, we can hear you.
Okay. Now look at this small place here. Look at this small place. This is a sideways movement here. As you can see. All right. As you can see. At this level, we won't be trading. We just let it do whatever it wants to do. So there are 3 ways the market moves: up, down, sideways. The 2 ways we are interested in is when the market is moving up or down. All right. When it's moving up or down. So let's talk about when the market is moving up. All right. So if this market is moving up, we can call it bullish market or uptrending market. All right, look at this. This market here is an uptrending market, right? Because it is moving to the upward direction. It's going up. If you just open a chart, you can see that this is going up. As you can see, it's going up. So this is an uptrending market. All right. So in an uptrending market, guys, you want to only be looking for opportunities to buy. You want to follow the trend. Be the friend of the trend. You want to look for opportunities to buy in an uptrending market. It's as simple as that. In a downtrending market, you want to look for opportunity to sell. In a market that is ranging or going sideways, you are leaving it. You are not trading it. Of course, there are people that trade in a sideways market, but we don't do that here. I don't do that here. I just let it slide because, of course, there are a lot of markets to trade on. to trade on. So I'm not going to just be religious with one. I'm not just going to stick to one. I'm going to check other options. All right. So let's talk about this. In an uptrending market, and again, I said this on TikTok, the market will not just keep going up for eternity like this, right? The buyers know. Now, when the market is going up, there's something happening. There are two kind of people in the market, right? If you if you open the first chart, there are two things you either want to do. You either want to be buying or selling, right? Now, there are two kind of people in the market: people that are buying and people that are selling. It's either you are buying or you're selling. See, guys, if you open a chart, open a trade, if you buy that same point you bought, some people is selling there. If you open your chart, you buy. There are millions of people that are buying the same time you're buying. There are millions of people that are selling the same time you're selling. So at any given point in the first market, there are always buyers and sellers. All right. Now, what moves the market, guys? Please don't tamper with the this thing. What moves the market? All right. The amount of buyers and sellers that are in that particular market. All right. Now, let's say there are 100 people trading at a particular time. 100 people are trading. If 80 people, 80 of, let's say if 80 of all those 100, right? 80 people of all those 100 are buying. Out of 100 people, 80 are buying and 20 are selling. What do you think is going to happen? The market is going to move up, right? Because they have more people are buying. So the market is controlled by the number of buyers and number of sellers. That's what literally controls the first market, whether forex, crypto, or whatever. More people are buying, the market is going to go up like this, right? It's going to move up like this. Now, once you get to a particular point, buyers are not going to be interested in buying again because, of course, it is not. We know this theory of buy low, sell high. When the market has gone to a high point, buyers are no more interested. There are a lot people are not buying anymore. They are not buying, right? They are just waiting. Of course, it's still an uptrend. People are still looking for opportunity to buy. But at that point, they are not buying anymore because they know this thing has bought for a long time. I'm not going to buy at this point, right? What happens then? Because at a given point, whenever you are buying, there are also people selling. Because now we are now having less people buying. Let's say there are 100 people, there are 80 people buying before. Now it has gotten to this point, and less people are buying. Less people are buying, right? Now it has reduced. People are buying are now reduced to like maybe um maybe 50 or maybe 45 or 46 people are now buying, and the remaining 64 people are selling. That is where you see that sellers are now in control, pushing the price down. The price will now come down. The market will now come down. When you get to a level that people are willing to start buying from again, they call it. Sorry, my network just went off a bit there. I'm having serious trouble with my network today. I'm trying to fix it. I'll probably fix it tomorrow. But then let's continue here. Let's continue here. Okay. Again, let me try and explain this again so we understand. All right. Let me try and explain. Guys, I try to explain this in a way that we are going to understand from the beginning because that's the foundation is very important. All right. It's very, very important. Now, there are 100 people that are willing to buy or sell in this market, right? Now, 80 people are buying, 20 people are selling. So we have my network. I'm coming. Let me switch to another network. My network is really terrible tonight. Let me switch to another network. Okay. I hope this one is going to be better. Let me share my screen now again. Okay. So there are 80 buyers, 20 sellers, right? Buyers have pushed the price to this level. Now, at this level, buyers are not willing to buy anymore, right? They're just chilling. Of course, the market is still on uptrend. They're still going to buy, but they are just waiting. All right. Now, because there are now less buyers, right? We now have more buyers. Let's say we now have 40 buyers and now 60 sellers. Of course, because there are more sellers, the price is going to come down. It's going to push the price down like this. Now, buyers are going to, there's something called point of interest. When the market now comes down to the point of interest, where we get to fair value gap, and other blocks, we're going to be looking at point of interest more better. But I just want you to understand the concept. When the market gets to where we call point of interest, where buyers are willing to start buying again, you're not going to see more buying powers. There are a lot of people buying again. Now we now have like 80 or even 90 buyers and 10 sellers. The market is going to shoot up because there are more people, a lot of people are buying. Now, even if people are selling here, but there are more buyers to sellers. That's why the market is not going to push up like this. It gets to a point, buyers are not willing to buy at this point again. Right? The number of buyers reduce and then sellers increase, and then the market comes down again, and then the same thing happens. Comes down again, the same thing happens. It's as simple as that, guys. This is simply what causes the market to move in an uptrend. Right? Now, in a downtrend, it's just the reverse. But then let me talk about that. In a downtrend, we have more sellers that are in control. It got to the low one, a very low point. Sellers are not willing to sell anymore. Buyers take control. It gets to a point of interest that sellers are willing to start buying heavily again. Sellers start buying. It pushes the price down. They're no more willing to start selling at this level. Buyers take control. It pushes it up. It gets to a point of interest that sellers are willing to start selling again. It pushes it again. That's what simply happens in the first market. Buyers and sellers are always fighting. And then one will take control and then will push the price to its direction. It's as simple as that. Now let's look at an uptrend scenario again. Now, an uptrend, we have what? High, low, higher high. This higher high is called higher high because it is higher than this previous highest point. And that is why it is called the higher high. All right. There are reasons for these names. All right. That is why it is called the higher highs. All right. That's why it's called the higher high. It's higher than this previous highest point. Now, this push here, when sellers take control, is called the higher low. It is high, but it is higher. It is low, sorry. It is low, but it is higher than the previous lowest point. So that is called higher low. Then we have it again, higher high, higher low, higher high. So in an uptrend, you are always expecting what? Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Like that. All right. So that is that for an uptrend. In a downtrend, we're expecting to see lower low, lower high, lower low, lower high, like that, lower low, like this. All right. In the downtrend, we're expecting lower low, lower high, lower low, lower high, lower low, like that. So that is what market structure means. Simply the movement of the market. All right. The movement of the market is what market structure simply is. All right. So the next thing we're going to talk about is what is break of structure? Break of structure. All right. So in an uptrend, we have higher high, higher low. The point at which the market breaks this. Now, this is the reason. And now for this market to keep being an uptrend, it's simple logic, common sense, guys. Common sense. For this market to keep being an uptrend, it has to break the recent highest point to give us what? A new highest point. Break the recent highest point to give us a new highest point. To confirm that it's an uptrend, right? It has to keep going up. So if this is the highest point and the market has come down, it has to, for this to keep being an uptrend, it has to give us a move that is higher than the highest point. So the point at which the market breaks the recent highest point to give us a new highest point is called what? Our break of structure. This point is our break of structure. Let me label it break of structure, BOS, break of structure. So the market gives us this push again. What are we expecting? Break of structure. Where's our break of structure here? Here's our break of structure. Break of structure, right? Break of structure, break of structure. That's just simply this. That's simply what break of structure is. So what is break of structure in a downtrend? Where is break of structure in a downtrend? In a downtrend, we're having lower low, lower high. The point at which the market breaks the recent lowest point to give us what? A new lowest point is what we call break of structure. All right, break of structure. Now let's look at this on the real chart. Let's look at this on the real chart. All right, so let's go to the real chart and let's look at this on the real chart. Now let's look at this. Look at this thing here. Let me draw the pattern. Let me draw this pattern. So we have, this is an uptrend. We have what? Higher high, higher low, higher high. We have this low here. Now, this is where so many people get it wrong. A lot of people will think this here is a higher high, and then we have another higher low like this. No, that is not a higher high. Why? Because in a higher high, we're expecting what? Break of, where is the break of structure here? In this one, this is our break of structure. Let me even get this thing out. No, let me just draw here. Here, this is our break of structure here. Remember, break of structure is at the point where the market breaks the recent highest point to give us a new highest point. This is a new highest point. Now look at this one here. We have, this is supposed to be the break of structure, right? Look at this. It did not break it here. So this here is just internal structure. It's at this point we had our break of structure. So I will not draw this like this, right? I will not draw this my part like this, right? Look at this part. Let me bring it up. This is not how it's supposed to be drawn, right? This is how it's supposed to be drawn. So you need to understand this properly and not think this is a break of structure. This is a higher high, higher low. This is not higher high, all right? So let me draw this correctly. We have what? Higher high, higher low, higher high, higher low, and then higher high like this. This is the correct way to draw this. This is the correct way to draw this. And where is our break of structure? Here is our break of structure. And here is our break of structure. Here, look at this. Let me draw this one. Look at this. It did not break that structure. So this is not what? A break of structure. It is just internal structure, just the high. It's just an internal structure. All right? So this is where our break of structure happened. You just need to understand the concept. You need to understand the concept. Now, let's talk about a downtrend scenario. Let me get all this thing off. All right, let me just leave this, all right? A downtrend scenario. Let's look at the downtrend scenario. Look at this one here. Here we have what? A downtrend. We have what? Lower low. Lower high. We have this lower low, lower high. And then we have this lower low. Right? That's what? A downtrend. Where's our break of structure? Break of structure here. Break of structure here. That's just our break of structure, guys. Break of structure. All right? So that's just it. Now, let's continue here. So what is our change of character? What is change of character? Now, this is an uptrend, right? And the market will not just keep going up for eternity, right? At the point the market is going to change. Look at this. Let me show you an example. Look at this. The market was an uptrend here, then later it's a downtrend, then later it's an uptrend. So it will not just go up for eternity. Sometimes it's going to go up, it's going to go down, and all this kind of stuff. So how do you know? Now, the process of the market changing its trend from an uptrend to a downtrend is what we call change of character. Change of character. Now, let's look at that. Now, in an uptrend, we're going to have higher high, remember, higher low, higher high, higher low, higher high. Now, this here, I like to know what my point of interest. Where's my point of interest? I'm interested in this area here. This area here is my point of interest. I'm interested in. All right. And then, again, we said for this to keep being an uptrend, we have to see something like this, a break of structure, break it to the upside, right? But then what if, and again, I said the market breaks the recent highest point. What if the market, now this is the recent highest point, this is the recent lowest point. What if the market breaks the recent lowest point? So the point at which the market breaks, it can literally do like this, breaks the recent lowest point to give us what? A new lowest point, right? Is what break of structure. This point here, the point at which the market breaks the recent lowest point to give us what? A new lowest point is called break of structure. It's as simple as that, guys. And it's very important. Guys, understanding this concept alone, is going to make, it's a game changer in the forex market for you. Being able to recognize this properly on the chart is a game changer. All right, let's look at this in a downtrend scenario, right? Let's look at this in a downtrend scenario. As if you note the way I'm explaining this, I'm trying to take this one step at a time so we understand. Guys, please, are you following me, please? Are you guys following me, please? My network is bad, so I need to. Are you guys following me, please?
Yes, we are following you, but your network is kind of breaking.
Oh, okay, okay,
Yeah, it's cracked a bit.
okay. So then, but then this whole section is being recorded, so you can always watch the recorded version after.
And please, can you repeat this change in structure again?
Okay, okay. Change of character. All right. Change of
Yeah,
character.
the change of character and stuff.
All right. I'm going to do for a downtrend scenario, so you're going to understand. All right. That's what I always do for uptrend and downtrend scenario. So in a downtrend, we're expecting what? We're expecting to see what? A lower low like this, lower high, lower low, lower high. Guys, once I have this my lower low like this, right? Once I have this my lower low, I like to, whether lower low or lower high, I like to draw out my point of interest, right? My area, the area I'm interested in, right? This is the lowest point. This is a recent, this is a current lowest point. This is a recent or current highest point, right? The current highest point. So if the market gives us something like this, I'm expecting the market to, give us a break of structure like this, right? To the downside. But then if the market did not do that, right? And it breaks what the recent highest points to the upside like this, it means the market has changed from a downtrend to an uptrend. So what I'm expecting here is what? In an uptrend, you're expecting what? Higher high, higher low, and then higher high, like this. Again, it might not necessarily be picture perfect like this, or diagram perfect like this. Sometimes you might see something like this happening, like this before a break like this. Where is our change of character here? The point at which, in a downtrend, the point at which the market breaks the recent highest point to give us what? A new highest point is our change of character. So let's look at this on the chart. Let's look at this on the chart. All right, let's look at this on the chart. Let me look at this. Now look at this. Look at this scenario here. The market was previously a downtrend and then it changed to an uptrend. So where did it happen exactly? So let's see this. Lower low, lower high, lower low, lower high, lower low. And then we have this high like this. I told you, it might not be picture perfect. We have this high. It came down like this. And then we had a break like this. As you can see, you can just call this like this. And then we have the continuation like this. Now, let me bring this thing out so we understand. As you can see, it was previously a downtrend. Lower low, lower high, lower low, lower high, lower low. And then look at this. It gave us this lower high, and then it did not give us what? A lower low. It did not break structure. We're expecting what? A break of structure here for us to say this market has continued what? To a downtrend. A downtrend. But it did not do that. Right? It did not break the structure. Instead, it what? It break gave us what? A change of character. That's it. This is the point that the market changed from a downtrend to an uptrend. And then I'll wait for this move to happen. And then after this move, I'll buy somewhere around here. And then my stop loss will be somewhere around here. Perfect, perfect opportunity to buy that market. All right. So that's just this. That's just this on that. That's just this. That's what change of character looks like or is. All right. So again, that's on market structure, break of structure, and change of character. Break of structure and change of character. So one more thing I'm going to talk about tonight before I end this section. Again, I want us to, yeah, go ahead. Someone wants to say something.
Good evening.
Yeah, good evening.
What if in a case the market broke, changed the character and it at that point it was supposed to go up, it started coming down.
Okay. Let me try and draw what you're saying. So the markets, let's say, is in an uptrend. It does something like this.
No, bring that one you were showing us.
Yeah, I'm trying to draw what you're trying to explain. A change of character. I've already took that one out. Change of character like this. And then we're expecting this to start coming down and then it start going up back again like this. Right? That's what you're.
Yes, without without change, without coming down, like without
Yeah,
retesting.
yeah. Okay, now again, a case like this can happen, right? I'm even going to show us examples, right? Something like this can happen. That is why we need a deep understanding. That's why I'm taking this thing one step at a time. But just to answer your question, I'm going to give you an example, an illustration. Let me just show you something quickly. And I'm going to tell you why. Just quickly, we have not gotten there, right? We have not gotten there yet, right? We have not gotten there yet. But then I'm going to tell you, I'm going to show you something. Now, look at this. Let me show you guys something. Look at this. Coming, hold on. Wait. I'm trying to look for a perfect example. But I don't want to go too far. I don't want to skip too far. Now, in cases like that, that is why time frame, that is where time frame comes in, right? That is where time frame comes in. Guys, you might, what is happening on the larger time frame, right? You have to follow what is happening on the larger time frame, then bring it to, you cannot just open a fresh chart and then go to a 15-minute time frame and want to start looking for, like all those kind of things happens on the smaller time frame, right? I want to look for an example of that coming. Look at this one here now. Now look at this. Let me show you something that is happening here. Hold on. I'm coming. I want to look for a perfect example of what you just shared, what you just showed me here. Aha. Look at this one. Guys, look at this one. Look at this. Let me just use this one as an example, as an illustration, right? Look at this one. This one looks like is an uptrend, right? Look at this. Higher high, higher low, higher high, and this one is a little bit. I will not consider this a pushback, but something like this can happen. Higher low, higher high, and then look at this. We have something like this, right? A lot of people might think this is a change of character here. I'm expecting something like this to happen, but then it's not happening because what is the general trend showing you, telling you, right? This is a 24-hour time frame. We go down to the 1 hour. I'll show you this place on the 1 hour. Let me just mark this place out. All right, let's go to the 1 hour now. I want to show you something to answer your question. Okay. I have to look for that place. It's a long place. Okay, it's far. Let me see if I can find it. Okay. Aha, here it is. All right. Okay. Please, are you listening? Are you following me, guys, please? Guys, can you hear me, please?
Yes.
Okay. Now look at this scenario here, right? We have higher high like this, higher low, higher high, higher low like this. Then we have this higher high. Then we have this push down. We're supposed to expect a break of structure here, but then look at this happened. And then we have a break of structure here. I mean, change of character, sorry. We had a change of character here. All right, so we're expecting that a logical person will be like, why did this didn't it just go back down? It will not go back down because what is this generally? You cannot, that is why top-down analysis, there is what we call top-down analysis. All right, there's what we call top-down analysis. If you go down to a higher time frame, and we're going to be getting there, right? That's why I always like to take things one step at a time. We're going to get there, right? That's why, like, you need to understand what is happening on the higher time frame to be able to. In the higher time frame, we know it's an option. I'm looking for opportunities to buy instead of sell. All right. And I can see a lot of things are indicating that this market is not going to go down anytime. So, of course, which is something I'm going to be showing us again later on as we progress. We'll be able. So this one is just understanding what I'm doing to you right now is just to understand market structure. So when we get there, I'm going to just remind me when we get to that topic. I'm going to bring this whole thing back, then we're going to understand this properly. All right. So let's continue. There's one concept I need to. I think I spent more than I should here. So let me just round up right now. So let me just explain this concept quickly. When exactly to start buying from, all right? So this is what.
Sir, please.
Go ahead.
I want to ask you a question.
Yeah, go ahead.
Like an buying points. Now, how can you notice when, like, if the change in character in the candles?
I can't. I did not get your question. Come again.
Like, there's like in the stock market now,
Yes.
there's a way you can notice that there's a way you can notice the change of character with the candle.
Okay, with candles. Okay, again, guys, I want to make you guys understand something, right? Listen, I understand. Please just type your question. I can't hear you. Just maybe put your question in the chat. Put your question.
Can I say something?
Yeah,
Can
go
I say
ahead.
something, sir?
Yeah, go ahead.
What he's trying to say is that, like, if you don't want to check
In
the change
a
of character
particular
in
way.
the yes,
Yes.
like, how can you identify
Like
it with
selling and buying.
candlestick?
Yes.
Okay,
That is
using
what he's
candlestick.
saying. Yes, for you to use candlestick and know that this is change of character. That's what it means.
Yes, that's what I'm trying to ask.
Okay. Now I'm going to try to answer this in a very simple way, right? Now, um, again, there are so many ways to trade the forex market. So many ways. So many ways to know an entry, so many ways to know point of it, so many ways for entry and all that. But then one thing I will always tell you is um there's something called candlestick pattern. Right? A lot of people use candlestick pattern to trade. They are looking for what? A doji, something like this. All right, they are looking for. All right, let me try and draw this properly. They are looking for to see something like this at the end of a trade, like a doji and all that. All this candlestick pattern stuff, right? Candlestick pattern, something like this. Yeah, they're looking for something like this, right? Rejection here, and then this is going to give us indication that the market is a downtrend. You are looking for something like this doji or hammer or whatever they call it. But see, me personally, I don't trade with all these things. I don't find all these things reliable. I don't trade with indicators. I don't check candlestick. The things I use, I see, of course, they can be added confirmation, right? You can use them as added confirmation, to better, know your perfect entry. But I don't use all that. I like to follow what the market is saying, not just what one candle is saying. All right. I like to follow what the whole general market is saying, right? That's one thing I do, right? Now look at this. Of course, look at this. Let me try and find something like that. If you are looking for just candlestick pattern before you enter a trade, you are going to miss out on a lot of sweet opportunities. Now look at this one here now. This is one thing that you might be talking about. This is a candlestick pattern here. Candlestick pattern. A lot of people are looking for something like this before they start selling, right? Now look at this now. When the market start, let me look for a place. Like, look at this here. Market start coming down from here. You are not seeing any candlestick pattern here. Some people might find out there are a lot of candlestick pattern. I'm not interested in using all those things. A lot of people might still maybe find a candlestick pattern here saying maybe this is engulfing candle or whatever. All those things. I don't use that to trade. I'm a very simple, basic trader. I don't like to complicate things. Too much information sometimes can lead to no information. Now, some people say, okay, this is another candlestick pattern here. This is another candlestick pattern here. Of course, they work, but not all the time. I don't use them, right? I like my style of trading. It is straightforward. I understand what I'm looking for. I understand what I'm looking at. It's just very straightforward. Now, look at this. Yeah, I'm just seeing all these things that you're saying now. I'm seeing so many candlestick patterns now, but I don't just use them. Look at this here. We have one here. We have bullish or bearish or whatever. I don't know. I used to know all those things before. Look at this, another one here. There's another one here. And I don't use these things. If you're focusing on all these indicators and candlestick pattern and everything, all this kind of stuff, you're going to miss out on a lot of trades. And you're going to take a lot of fake trades. Right? The market can be very funny, can trick you a lot of times. You just need to understand what moves the market, why it moves the way it moves. And then with that, you would understand firsthand how the whole thing is. So, guys, again, I've spent more time than I'm supposed to spend here. I have other things that I need to do right now. So we're going to be stopping the, and again, plus the network is very bad. We're going to stop the lecture here tonight. Tomorrow, I'm going to be talking more about change of character and how to use. Now, this is one thing I really want to talk about again in details. Impulsive, retracement, impulsive, right? When to buy, right? This is an option we want to be buying, but when exactly are we buying from, right? And we're going to go into that in details. And then we're going to do introduction to fair value gap and order block, which is an important question, right? An important topic we are going to be talking about. And then after all that, we're then going to be going into this, right? How to understanding the Deriv platform and everything. So we're going to be going into all that. But then by next tomorrow, guys, I think tomorrow is going to be the last time I'm going to be coming live on the Zoom for free on this free group, where I'm going to be starting next tomorrow in the VIP group, right? In the VIP group, we're going to be starting there in the VIP group, right? Because by next tomorrow, we're going to be getting into the real business, right? And I'm going to be starting the VIP group. So if you're not in the VIP group yet, send me a DM to join. It's just $30 to join. And then you don't want to be missing out. Guys, you don't want to miss out on all this, right? Because if you miss out on any key information, even if you join later, it's going to be difficult for you to get this. Trust me. Talking from experience, it may be difficult. So it's better you join early. And then just interested in the VVIP, I've already seen your DM. Again, I just want 10 people in the VVIP group. If you're interested in that, also send me a DM after this section right now. And then I'm going to give you the details and then I can add you to the group. So tomorrow we're going to have a much more longer, interesting section. And I'm going to try and fix my network issue. My network is very, very terrible today. And it has really limited taking a lot of time. So thank you guys for joining. I'm going to address.
At which time?
It's around the same time. Tomorrow I'm going to be going live on TikTok too. So I'm going to probably go live on TikTok around 6 or 7. And then by 9, I'm going to come live on Zoom. All right. So thank you guys for joining. I'm going to be handing this.
Sorry, one question.